Hi, good day to everyone. We are from Group 3. So today we're gonna examine about the case analysis for tax and zakat planning. Tax and zakat are important component of financial management in Malaysia. Tax is a compulsory payment imposed by the government to fund public services and national development, while zakat is an Islamic obligation requiring eligible Muslims to contribute part of their wealth to those in need. Proper planning for both actually helps individuals manage their financial responsibility effectively, ensuring compliance with legal and religious requirements and reduce unnecessary financial burdens. For our case analysis, we examine Ms. Farah Nadia, a 35 years old Malaysia tax resident for the year of assessment 2025. She is married with 3 dependent children and elected for joint assessment under her name. Ms. Farah works as a finance manager in multinational company and earn employment income through salary, bonus and also various allowances. Besides that, she also operates a cafe business and own a rental property that generate additional income. So throughout the year, she made contribution and expenses related to EPF, SSPN saving, medical treatments for her father, insurance, education and professional development, all of which are relevant in determine her tax and zakat planning. So this detail will be used to analyze her tax liability, available relief and zakat obligation for the year.
Hi and good day everyone. For my part, I will be presenting the financial information of Ms. Farah Nadia that is relevant for both tax computation and zakat assessment. Based on the case, Ms. Farah Nadia has 3 main sources of income, namely employment income of RM197,000 Malaysia, business income of RM80,500 and rental income of RM19,500. Therefore, her total statutory income for the year of assessment is RM297,000. Besides income, she also owns several assets, including an investment property that generates rental income, business assets used in her cafe operations, EPF savings, SSPN savings, and insurance policies. These financial details are important because they form the basis for determine both her income tax liability and zakat obligation. Next, I will explain the employment income calculation. Ms. Farah Nadia's employment income consists of 4 components. These are a salary of RM165,000, a bonus of RM18,000, benefit in kind accommodation valued at RM12,000, and a net entertainment allowance of RM2,000. When all these components are added together, the total employment income is RM197,000. The calculation is straightforward. Just 165,000 plus RM18,000 plus RM12,000 plus RM2,000 equal to RM197,000. This income is taxable under Section 13 of the Income Tax Act 1967 because it is derived from her employment. Moving on to the business and rental income. For the business income, the cafe reported a net profit of RM72,000. However, certain expenses are not deductible for tax purpose. These include personal medical expenses amounting to RM2,500 and a family vacation expenses of RM6,000. Therefore, these expenses must be added back to the net profit. As a result, the adjusted business income becomes RM80,500. For the rental income, the gross rental income received was RM30,000. After deducting allowable expenses such as assessment tax of RM3,500 and loan interest of RM7,000, the net rental income is RM19,500. Finally, by combining all 3 sources of income, which are employment income of RM197,000, business income of RM18,500 and rental income of RM19,500, Ms. Farah Nadia's total statutory income is RM297,000. This total statutory income will later be used in determining her tax position and zakat assessment.
Assalamualaikum and very good day to everyone and our respected lecturer. My name is Ain Ranisa and I will be presenting about Ms. Farah summary of gross and net income breakdown. So as we can see, this table consolidates Ms. Farah income stream. Her gross employment components, including base salary, bonus and accommodation benefits, bring her to Section 4B statutory income to 197,000, and her cafe business recorded an accounting profit of 72,000, but after adding back non-deductible private expenses, her adjusted business income under Section 4A stands at 8,500. And lastly, her rental unit nets 90,500 after clearing allowable costs. This results in substantial total aggregate income of 2,9700 before personal relief are applied. So, Ms. Farah gross income must be separated in clear statutory categories to correctly apply specific deduction allowed for each unique sources. So, how did we arrive at these exact figures? We apply strict tax law guidelines. First, her company petrol allowance of 4,800 is entirely tax exempt under Public Ruling number 11 2016 because it falls below the 6,000 threshold. Second, for her cafe business, Section 39(1)(a) dictates that private expenses like personal medical care and family vacation cannot reduce business profits. So we added back 8,500. And finally, under Section 33(1), we subtracted her rental property, repairs and mortgage interest to find her true net yield, ensuring capital repayments were excluded. So, proper tax planning relies on separating personal expenses from revenue generating expenses to ensure complete compliance under audit. Next is tax relief optimization schedule. To reduce this heavy tax base, we meticulously maximize her personal tax relief across all legally presumable categories. We utilize her joint assessment spouse relief, claim child allocations and cap her parents' medical treatment at the maximum 8,000 ringgit at limit. We also maximize her SSPN saving, lifestyle limit and insurance premium. By doing this, we claim a total of 56,900 in allowable relief, successfully knocking her taxable chargeable income down from 2,9700 ringgit to 2,400 ringgit. So, maximizing relief is the most accessible way to shrink a person's taxable income down into lower marginal tax bracket. Next is income tax computation and liability breakdown. Now looks at the actual tax calculation, applying LHDN scale to her chargeable income of 240,100. The first 100,000 attracts a base tax of 9,400 ringgit. The remaining 140,100 hits a 25% at marginal tax rate, adding 35,025 ringgit thousand and resulting in a gross tax liability of 44,425 ringgit. However, this is where our planning shine. We deduct her total calculated zakat of 6,422 ringgit and 50 cent as a direct dollar for dollar Section 6A rebate. This significantly lowers her final net tax payable to 3,000 ringgit Malaysia. So zakat functions as a direct dollar for dollar bottom line rebate, which is financially more powerful than an income deduction.
Next is the tax planning. This section shows the classifications of taxation categories. First is individual income tax, refers to the employment income such as salaries, performance bonus, furnished apartment benefit, petrol allowance, and entertainment allowance. These are taxable because they are earned through employment as a finance manager. Second is a business income tax, refers to income from a cafe business operated as a sole proprietorship. Since the business is not separate legal entity, the profit is combined with the owner's personal income and taxed accordingly. Third is the investment income tax, refers to the rental income from a condominium unit. This income is taxable, but allowable expenses related to the property can be deducted. Lastly is the personal tax relief and rebate, include EPF contribution, SSPN saving, insurance premiums, education fees, medical expenses for parents, books, lifestyle purchases, internet subscriptions, and child relief. These are not income but deductions that reduce the chargeable income and overall tax payable. Next is chargeable income and tax liability. In this section, I will explain the calculations of chargeable income and tax liability for this case. First, we look at the aggregate income, which represent the total income earned from all sources before any deductions. This include the gross base salary of 165,000, a performance bonus of 18,000, a furnished apartment benefit of 12,000, and an entertainment allowance of 5,000 after deducting entertainment expenses of 3,000. It also includes business income of 80,500 and rental income of 19,500. Therefore, the total aggregate income is 297,000. Next, we move on the tax relief, which are deductions allowed by the tax authority to reduce taxable income. These include individual and spouse relief, child relief, medical expenses for parents, SSPN saving, professional cost fees, insurance premiums, EPF contribution, and the lifestyle relief. The total tax relief amount is 59,900. And after deducting tax relief from aggregate income, we obtain the chargeable income. So 297,000 minus 56,900 give a chargeable income of 240,100. Next is a tax computations. The tax is calculated based on Malaysia's progressive tax system. The first 100,000 is taxed at 9,400, and the remaining 140,100 is taxed at 25%, which equals to 35,025. So the total tax payable before deduction is 44,425. Finally, we deduct zakat payment of 6,422 and 50 cents from the total tax. Therefore, the final tax payable is 38,002 and 50 cents. In conclusion, this calculation shows how total income is reduced by tax relief to determine chargeable income, and how tax is calculated using progressive rates before applying zakat to reach the final amount payable. Next is the tax planning recommendations. In this section, I will explain several tax planning recommendations for Ms. Farah to help reduce her tax liability and improve her financial position.
First, Ms. Farah should continue maximizing her EPF contribution. This allows her to enjoy tax relief while also building a long-term retirement saving. It helps reduce her taxable income and improve her financial security in the future. Second, she should continue saving in SSPN as it qualifies for tax relief and reduce her chargeable income. At the same time, it helps her prepare for her children future education expenses. Third, Ms. Farah is encouraged to invest in the professional development by attending courses or obtaining certification related to the finance and management. These expenses may qualify for tax relief and also support her career growth. Next, she should optimize her insurance and medical relief. By maintaining life and medical insurance coverage, she can benefit from tax relief. She should also keep proper record of her parents' medical expenses to ensure all eligible claims are made. In addition, she should maintain proper record of her rental property expenses, such as maintenance fee, quick rent, repairs, and the loan interest. This will help reduce her taxable rental income. Lastly, Ms. Farah should ensure all business expenses are properly recorded and claimed, including salaries, utilities, rent, and other operational costs. This ensures accurate profit calculation and reduce unnecessary tax payable. So in conclusion, this strategy helped Ms. Farah reduce her tax burden legally while improving her financial planning, saving, and long-term stability.
Assalamualaikum and good day everyone. I'm Nur Alia binti Ahmad Othman. Today I will be presenting the Zakat planning case analysis for Ms. Farah. The primary focus of this analysis is to evaluate how her active and passive income streams are managed in accordance with Sharia principle and contemporary fatwas in Malaysia. Based on the guidelines set by Malaysian state zakat authorities such as Lembaga Zakat Selangor and PPZ Mawi, all of Ms. Farah's income stream, both active and passive incomes, are subject to zakat. However, this obligation only applies if her total wealth meets two conditions: nisab, the minimum threshold equivalent to the value of 85 grams of gold, and haul, the completion of a 1-year possession period. Three main sources of income are evaluated for Ms. Farah's final obligation. First, employment income, zakat pendapatan, core remuneration, base salary, bonus, and cash allowances. Second, business income, zakat perniagaan, net earning from her sole proprietorship cafe. And third, rental income, zakat sewaan, passive revenue from her condominium unit. Now let's look at the specific items that are excluded from Ms. Farah's zakat calculation. It is crucial to identify this to avoid overcalculating her financial obligation. First, benefit in kind. The furnished apartment provided by her employer, valued at RM12,000, is excluded because it is a non-monetary benefit. It does not constitute liquid wealth that can be saved or dispensed. Second, the employer's EPF contribution. The RM21,450 contributed by her employer is not subject to zakat at this stage. According to contemporary fatwa, EPF funds are only zakatable once they are officially withdrawn and come into her full physical possession. Third, official entertainment expenses. The RM3,000 spent here is strictly for official company duties, since it is a corporate reimbursement or direct expense. It does not represent her personal wealth. Moving on to the core, our calculation, Malaysia Zakat authorities recognized two primary assessment parts. First, net income or head kifayah method for her employment income, and the profit and loss method for her business and rental asset. Let's break down the three distinct types of zakat. First, type A, zakat pendapatan, employment income. Her gross cash income totals RM 192,800, which includes her base salary, performance bonus, and cash allowances. From this, we apply the head kifayah framework to deduct her basic living costs. This includes her own EPF contribution and her father's C-certified medical treatment. This brings her total allowable deduction to RM 35,900, leaving a net income subject to zakat of RM 156,900. Type B, zakat perniagaan, business zakat. For her cafe, which operates as a sole proprietorship, we utilize the profit and loss method. Her accounting net profit is RM 72,000. However, to restore the true distributable business income base, we must add back personal expenses paid out of the business account, specifically RM 2,500 for personal medical bills and RM 6,000 for family vacation. This adjustment bring her true net business income base to RM 80,500. Finally, type C, zakat sewaan, rental income zakat. For her property, her gross rental is RM 30,000 after deducting direct operational property expenses like assessment tax and critical repairs of RM 3,500 and deducting immediate financial debt in the form of housing loan interest of RM 7,000, we arrive at a net rental income base of RM 19,500. To conclude this assessment with a vital tax planning note, when we sum up these three base and apply the 2.5% zakat rate, Ms. Farah's total zakat obligation comes to RM 6,400.
Hi, Assalamualaikum. My name is Muhammad Nur Azam bin Zakaria and I am from class NBF7N. So today I will be covering about planning and strategy and benefit of tax and zakat, and also conclusion and recommendation. First of all, planning and strategy is to maximize individual tax relief. Claim all eligible personal tax relief when submitting the year assessment of 2025 income tax return. Second is to separate personal and business expenses, which is to maintain a clear separation between personal and business finances to ensure accurate tax reporting and compliance with the Income Tax Act 1967. Third is to claim all allowable business expenses, which is to ensure that all expenses acquired fully and exclusively for the production of business income are claimed as deduction under Section 33(1) of the Income Tax Act 1967. And fourth is to maintain proper record of employment allowance, which is to support the tax exemption claim on the petrol allowance of 4,800, which is within the 6,000 annual exemption limit for official duties under relevant LHDN guidelines. Okay, next we'll be moving on methods for fulfilling zakat obligation effectively. My suggestion is to pay zakat on employment income first, and second one is to pay zakat on business income, and third one is zakat on investment or rental income. Okay, next I'll be discussing on benefits of paying zakat. For the employment income, which is zakat pendapatan, it will fulfill religious obligation by ensuring income earned from salary, bonus, allowances, and it will be purified in accordance with Islamic principles. Second, to improve financial planning through regular monthly zakat payments, making it easier to manage personal cash flow. Next, for business income, it helps promote ethical wealth distribution by contributing to the welfare of eligible zakat recipients and supporting the community. Next, to encourage proper financial record keeping by maintaining accurate financial statements, receipts, invoice, and business records for zakat calculation. Moving on, investment or rental income, which is to enhance tax efficiency by lowering overall tax liability while remaining compliant with both Malaysian tax regulation and Islamic financial principles. Second point, to encourage better investment management by maintaining proper records and rental income, property related expenses, which is leading to more informed financial decisions. And last but not least, for conclusion and recommendation, based on my recommendation and conclusion, I think that by paying tax and zakat, it ensure tax compliance. For report employment, business, and rental income accurately in accordance with the Income Tax Act 1967 and LHDN guidelines, which to maintain proper records to avoid errors, penalty, and non-compliant. Second is to maximize tax savings. Claim all eligible personal tax relief and allowable business and rental deduction. Second, to separate personal and business expenses and retain supporting document to reduce taxable income legally. Next is to fulfill zakat obligation. By paying zakat on employment, business, and rental income through approved zakat institution, it will benefit from the tax rebate available under Section 6A3 of the Income Tax Act 1967 while fulfilling religious obligation. Last but not least, to maintain a good financial management, which is to keep accurate final records and practice effective tax and zakat planning. It also may improve financial management, reduce tax liability, and ensure long-term compliance with both Malaysian tax laws and Islamic principles. Thank you.